This is the first trade of quite a few that I ended up taking throughout this week so far, and I just wanted to break it down for you with essentially the open of this trade being down here and the close being up here. You can see I missed out on a bit of profits by, you can see the maximum the maximum favored excursion of where it could have been taking profit, but let's get into it right away. So this is the first trade. Let's head over to trading view so we can break this down for you in a lot of detail. So if we just head over to trading view here, come over to here and let's break it down for you because it was essentially this swing failure pattern here. Now, you may be thinking it's just a swing failure pattern, nothing too complicated at all. But when I break it down into a bit more detail, this can actually be really seen as quite a really context-driven trade. So rather than just looking at a swing failure pattern, we have a initial low put in. So this is what we're going to be looking at, initial low put in on the chart. We then spend, if we just grab a measure tool, we then spend a lot of, well, 4 hours and 10 minutes going sideways before then sweeping the lows and then seeing it rise to the upside, which I capitalized on. And let's get into that. So if we just head over to XO charts now, okay, head over to XO charts, and what happened upon that low being taken. So if we just reset this, this is the 5-minute chart. Okay, and this is the swing failure pattern down here. Right, let's just maximize this for you so you can see it. So again, just to refresh your memory, okay, we can even reduce the tick size essentially, but we've got, this is the initial low on the chart. Okay, this is that low being taken for swing failure pattern before then that rise to the upside. But first of all, before we focus on the swing failure pattern, I want to really discuss what happened before it and after that initial low being put in, that 4 hours and 10 minutes of sideways price action. So if we just take our dynamic profile tool, I've got it set to D on my keyboard, and we just take it from after that low is being put in to before the low is taken, okay? Even after, it don't really matter too much. But you can see here I'm focused on two key factors. The first one being the CVD, the second one being the open interest. So you can see CVD and open interest are going to be telling me two factors. What's going on within this type of this period. And you can see here that CVD is increasing, as shown by this line format here. So CVD going up. You can actually then see, so that's telling me there's buys coming in. Market buys are coming into the market. Now, we don't know if they're new or whatever at the moment, but if we then look at the open interest, you can see that open interest is overall increasing. So it's now telling me that there's new buys coming in, new buys. So this tells us if it's new or not new or closing positions in that sense. And this tells me is it longs or shorts that are coming into the market? So we can then see there's a lot of new buys coming into the market throughout that time period. Now, the way I'm thinking at this moment is, okay, we've got an initial low put in on the chart, and since that low's been put in, you've got a lot of new longs opening. Now, where would you think those longs be placing their stop losses? Well, I would be thinking below this initial low again, just to reference to that again, would be this initial low here. So the thought process would be, if we can get that swing failure pattern of the low to stop them out again before then seeing a rally, that would be some sort of anticipation of a swing failure pattern before it actually occurs, using the context of the chart and the time period between the initial low being put in and it being taken out. Now, once that low was actually then taken out, you can then see we actually saw that decrease in open interest, which is no surprise because we just said there's a lot of new longs opening and we were preparing for them to be stopped out because they're going to be placing their stops below this initial low. A decrease in open interest tells me that those were the people, people are getting stopped out as positions closing. In this case, as price is dropping, it's actually new longs, being stopped out, driving this price towards the downside. I don't know if this is going to work, but if we just try and hit replay from here, hit the pause button, decrease the speed a bit, we can actually see this happen in real time almost. And as it's being taken, you can see we've got this large negative delta coming in towards it. So chart settings quickly, and then we head in over to the, which one is it, cluster. I've got this on delta base, so the you can see this is all the delta coming in down here. We hit the play button, and you can see all this negative delta coming in, and really simply using all of that knowledge beforehand gave me a lot of confidence to enter this trade straight away. There's a few things driving this trade. So as soon as I saw this, when I got my entry almost, I did have a little bit later. I believe it was like 34.10, but that doesn't really matter to me because I know where my invalidation is at this point. I hit the play button, but you can see here we actually saw a spike in volume. So again, what is a spike in volume? You look at this candle here, so the level of interest, the initial low being taken. You can then see the candle volume being 10.4 million. Okay, and you can then say to yourself, okay, well, look at the last 20 or so candles and go, okay, well, this is actually higher than the average of the last 20 or so candles on average. Therefore, I'm classifying this as a spike in volume. You've then obviously actually seen a few liquidations, nothing extravagant. Generally on the inverse, I like to see beyond 30k. On the linear, for those of you who are trading that, you can be looking for more than 60, 70 plus k if you're using synthetic volume. Okay, just for a little tip for you, if you're using synthetic volume, head over to data source, turn on synthetic volume if you want to see it in the dollar denomination. Okay, so obviously once that happened, I got into my trade in terms of long invalidation being below this low, because then, you know, the idea of this trade was to wreck everyone that was anticipating a long position relatively early and then get the move they initially intended. So you saw this little rise. Again, New York session had begun. I like to see lows and highs put in on New York session typically. Okay, you then obviously see this generally quick rise to the upside after that, leading to the move up. And obviously I was then end up taking profits. And something I didn't mention, just heading back over to, if we just go back over to trading view, this whole, you know, looking for a long, and my whole context based upon this whole trade was a bit more than just this whole scenario here. I actually had a high hit rate level coming in up and around here. You know, I mentioned it a while within the stream and whatever it may be. It was like $30,830, 85+% hit rate of being hit within 2 days. It ended up being hit, you know, not only there, but, you know, within the next few days worth of price action, which we're going to break down here as well. Which, you know, we then saw that swing failure pattern, and as soon as that, this was my first take profit. Because of that, you know, those statistics, I have such conviction in the idea that price are going to be hitting this level based on my own stats. A lot of people would not be putting the work in to get such statistics, therefore not giving them the edge. It's out of just pure laziness. And this is what gave me the edge at the end of the day to actually maximize the R multiple I was getting from this trade. You know, even if I entered here, but because, you know, most people will take profit up here, I said it on stream, I'm not going to be taking profit at this high really. I'm really looking for that level to be hit, you know, up and towards that 30,830 region, giving me that it was overall, it ended up being like a 3+ R trade. Even on this drop, I still held 25% because I knew the region had just been tapped, but usually it's more than just tapped. It would, you know, it's usually traded through a little bit. So obviously I was waiting for that. You know, we then saw this move towards the upside, you know, to look for the swing failure pattern of this high. So again, we've got a similar process here. So first trade kind of gone through, which was, you know, I took off 75% of that first TP. I left off, I believe it was actually 15%. So I you know, took 85% plus profits, left 15% running, dropped, still left it running. It ran all the way up. We saw a swing failure pattern to then drop, and I traded this move here. So hopefully that explains the first trade. Moving on to the second trade now, we obviously had the idea that this zone was still kind of relatively untapped almost. So we just take a tool here. So obviously hopefully understood that first trade. And again, I took profit on my long again here, the remaining 15%. I completely almost closed it up here. And what I actually did was entered into a short trade here. So let's get into this one a bit more, because you have a very similar scenario where you have an initial high. I didn't trade it based upon this whole initial high concept here, right? But I took a swing failure pattern short, and I'll give you a lot of stat for free almost, which is on a Wednesday in particular. Okay, on a Wednesday, in particular London session, it's very, very low likelihood that on a Wednesday London session is going to be putting in the daily high or low. Now, if this was happened within New York session, I would have had a lot more conviction that this would have seen a much larger drop. But it happened within London session, and although it looked like a good trade, which I did take, and I actually got like a 1.45 R out of it, so 1.4 or 5 R around there. It was actually 1.48 to be exact. You know, we saw this drop to the downside, but overall it was taken out, and I was anticipating for that, hence why I was actually still able to extract a decent R multiple from it. So we'll break this down in a second using XO. But the idea was that I wasn't looking for this to be such a large drop, hence I was fairly aggressive on taking profits on this trade. Just heading over to XO charts again now to break this down. Okay, you can then see obviously we had that swing failure pattern on the low. Let's just stop this whole replay function going on. Let it reload. Okay, and within London session we saw a swing failure pattern with a, you know, where's this high? Let me just mark it out for you. I'm using the box tool, might be a bit easy. Yeah, I could just do this actually. Double click on the axis at that high, and you can see we had this swing failure pattern at the high, which is where I really had a decent entry on this trade. Like, bear that in mind. I really had decent entry in validation above the high here. And again, very similar story where we saw a spike in volume, 4.1 million. If you look at the last 20 or 30 candles on average, I'm not looking at the highest volume, on average, relative volume, and I'll be going over the indicator I'm using on TradingView at a later date or whatnot. But you can then see here that we saw, again, a spike in volume, 4.1 million. If you look at the last 20 candles on average, and I'm eyeballing this data, it's higher than the average, okay? You then also have a trapped value area where, you know, price wicks up, you know, opens here, wicks up, closes back down here. The value area is trapped up here. You can then see, okay, you've got a spike in volume, trapped value area at a key level of interest for me, into that high hit rate level again. it's going to trigger a short trade for me, but I know this is not that likely to be putting in the daily high almost. You know, I'm looking for still higher prices to be put in based upon the statistics of this being the lowest likelihood probability of putting in the daily high within this specific London session. It then swing failure patterns are high. We see a drop in price action. I'm taking profits along this way. You know, I basically laddered in all take profits, which, whoops, remove this, below this box here, and I ended up taking quite a good chunk off. It was like 90+%. I really wasn't looking to hold this trade too long because of that stat, and that's where it pays off. And it ended up being like a 1.48R to be exact with you. Not again my generic 2+R trades that I end up taking, but 1.48R is not too bad either. So obviously that didn't happen. I was looking for higher still. So obviously I really was closed out this trade before New York even opened because there was news today. So today's the 13th of July that I'm recording this on. There was a news event, and I was anticipating a potential swing failure pattern of this London high. A London high swing failure pattern setup is fairly common. And then what you see of K is, just breaking onto the next trade. So we'll go back over to trading view to explain it again. So we also saw that swing failure pattern trade, which I ended up getting out of. We then saw another swing failure pattern. You can be looking at this 5-minute or the 15-minute, whatever you want. You can see, so this is the, all my trades are basically derivatives of swing failure patterns almost. Swing failure pattern again. And you can see these colored candles are where you're getting the spikes in volume. You had a naked session point of control. And I think a lot of people were actually anticipating this high to be taken out. That's like trap number one. A lot of people were looking for the high to be taken out. I wasn't. Why not? Well, first of all, I've just got an eye for like seeing where liquidity is almost. And this has just become with general experience where I could see this just liquidity building all below us where we hadn't taken any liquidity over the last few hours, a lot of hours, 12 hours or so of just no liquidity being taken. And that was like, I was looking, this was like my first take profit really, it was down here. It was like 30,498 because I was looking for 30,500 to be taken for liquidity. But I was looking for the swing failure pattern. We got it upon the news hitting. So there was like news volatility at 130. Fairly common again. Now New York session's begun. I know there's actually a greater likelihood probability of us putting in that high of the day. So obviously we saw a swing failure pattern. That then gave us the trigger, spike in volume in that sense. Trap value. I'll head over to XO charts to show you this as well. Okay. So 5-minute or 15 minutes going to show the same fairly similar data. You can see in this case, there's a lot of things checking this box. Now let's go over this in detail. This will be a really good one because what happened was you saw a spike in volume, clear spike, typical because you've got the news event going on anyway. 50 million, almost really good. Upon, again, we'll just move this up because this was a new SFP high up here. Okay, and then we saw obviously, so spike in volume, 50 million at our level of interest, not at random levels, okay, at levels of interest. We saw that swing failure pattern play out with the spike in volume. We then see extended delta where you can see here 4.6 million delta maximum where the candles closed red, and you can see the discrepancy between this figure here and the actual finalized delta. There's actually a decent extension in the delta there, so where you've actually seen the final delta end on negative, but there was extension towards the upside, trapping those potential delta max figure. You then also seen liquidations. Like I said, 30,000 is what I want to see. This ended up being 1 million, very large amount, with a trapped value area as well. Value area being from here to here, point of control up here. A lot of, every single factor was on there. I wouldn't miss this setup for the world almost. If I'm at my PC, I'm going to be taking this, tons of different factors there. And I didn't actually have my validation above the high in this case because the wick was fairly large. When you see, and this is something I'll dive into at a later date, of course, but fairly large wicks. I don't like to be placing my invalidation above the very, very high. There's going to be better places where I can place my invalidation. For example, the point of control, or even this high volume node here, or high delta node in this case right here. Now, why is that important? Well, that's going to increase my R multiple overall. And in this case, like I said, for the and as soon as I saw that candle close, I got a decent entry on this one. I think my entry, to be exact, was around that 30,870 region, or it wasn't amazing, but it was up here. So in that case, this ended up being like a 4 or 5 hour trade. Heading back over to trading view, you can see that was the colored candle giving us that spike in volume. But then, like I said, my first TP, I literally just set it below this low here. It hit it. We saw another move back up. I thought I was going to get stopped out of this. I thought it was just going to continue rallying up. I had 20% left in it still at this point. I took 80% really hard profits at that stage quickly. Just putting on this short modifier, 30,870. okay, and like invalidation not above the direct high. And you can see here, you know, I took profit all the way down here, and I was very aggressive on it. I don't, you know, I'm not gonna like just leave on, take 50% here and, you know, let the rest run. I'm very fairly aggressive on this. So I take 80%, leave 20% running, think I'm going to get stopped out. I just get missed, you know, because I move my stop to break even. In this case, price then ends up turning back around, and I actually closed the remaining out of it here, where I should have probably kept it running, but I closed the remainder of it here. So that is the 3 trades I ended up taking. Okay, hopefully you've understood a bit of the context, swing failure patterns, and all of that jazz, to be honest, as to how I took this trade using swing failure patterns, relative volume, exo charts, delta maximum minimums, key levels of interest, market context, you know, using the dynamic profile tool down here to basically trap those early long positions, to lead to these 3 trade winners. And like I'd like to say, as always, I do not win all my trades. You've seen past videos that I've done uploading my losing trades, why I entered, etc. This is just a string of winners that I'm on at the moment, and I'm bound to have a string of losers at some point, which again will be covered. No bullshit here from that point of view, to be honest with you. So yeah, I hope you enjoy. I really post all this stuff to Twitter at Luxury with an extra Y on the end. Go check it out there for my intraday updates on a consistent basis for free. I'm going through the applications from the website on a continuous basis. There's more applications than I thought of, so bear with me on that front, and I'll see if I can actually fit a bit more people in if necessary. But yeah, hopefully you understood, found this valuable from a trade breakdown standpoint, and I'll catch you all later. Bye.